It looked pretty good here in the morning with a bit of sunshine, but it was a bit of an exception over the past weeks with regard to the weather. So I hope you all made it in dry. There might be some people still waiting outside somewhere for things to dry up before they can actually come over. So it probably will get a bit more busy along the way. So please everyone move in as far forward as possible so we can get some people more coming in at the back. Very much welcome at the Holland Fintech Meetup in November. We're very keen to actually take you on a journey a bit into the developments in SME finance today. Very kindly hosted by 5 Degrees. Thank you very much, guys. Let's give them a big hand already. Thank you, 5 Degrees. Very happy with the team here. We've already done quite some events here, and we're always keen to be here and share the audience and share some experiences here with the team of 5 Degrees. So we're always it's always very kind that we can join here. We've got some nice speakers for you today. What can you expect? I've got a bit of an agenda here. I hope you can also watch it in the back. I'll be doing the opening words, obviously, at the moment. Then we'll get a bit of a market update. So we'll tell you what happened over the past month in fintech. Just give you some highlights to keep you up to date. Then we'll get a presentation from Fyndoo, telling you a bit of an update. Fyndoo, as a partner of 5 Degrees, can tell you a little bit more about what they're up to. Then we'll do an interactive Kahoot Quiz, which you might be familiar with, so get out your Kahoot apps and join the show. Then we'll get 2 presentations still, one by Marijn van Aerle from Floryn, and after that we'll hear from Fintech 21, I went too far ahead already, 21, telling you about their solution for inventory finance. And then we'll wrap it up, and of course we'll continue where we just started already with some nice mingling and drinks. I hope it's all clear. Am I well audible at the back? All good there?
Yes.
All right. Then we'll get going. So very briefly, my name is Don Ginsel. I'm founded Holland Fintech about 9 years ago. And we really saw that there was an opportunity to actually use the concept of fintech as a change agent in the financial industry. We really believe that the use of technology can really enforce financial institutions and technology players to actually do what customers need in financial solutions. So we really want to power that movement. And it's an association that actually works together with around 200 organizations, from startup to scale up to large incumbent financial, including tech platforms and including all kinds of experts to help us along the way. We really believe that everybody should be a part of that same ecosystem, because together we can share knowledge, share a vision on where things are heading, and together work towards better solutions for customers. And one of the ways we do that is by organizing events to bring people together and help them understand how you could actually collaborate. Because in general, what is fintech about? It's a big fragmentation of the financial market where everybody can choose their specialism and contribute in any kind of way into financial services that actually matter to end consumers. So that's what we're about. If you'd like to know more about it, talk to any one of our team, but especially we also hope to inspire you to just try things with technology. And so what's happening in the news, we always one of the key things that we try to do is also make sure everybody speaks the same language and has a similar background with regard to understanding of the market. So one of the ways we can actually contribute to that for you today, for example, is besides of course giving you some great examples of companies and telling you what they're up to give you a bit of an example of some things that are happening across the globe. That's why we actually do a bit of a monthly wrap-up. And we actually see that there are quite some interesting developments over the past month. For example, Pay by Bank, which is something that we would in the Dutch market already know by Ideal, for example. A similar platform was launched by JP Morgan in the US, which especially there, in a market where credit cards still are the major tone and they're actually still writing checks. Pay by Bank is actually quite an advancement in the US market from a payment perspective. Quite interesting to actually see that working well, and they did that on the rails of open banking by MasterCard. Another interesting thing, last month we already discussed that Apple Pay was actually also allowing you to pull in your bank account balance. So that means that you don't just only basically make payments, but you at the same time can check your balance at your Apple Watch or in your Apple Wallet. Which means that you actually have a less reason to go to your banking app, reducing the number of interactions you have with the banks and increasing the number of interactions you have with Apple. Very interesting development. Next step they're doing, they announced last month, in the US they're launching Buy Now Pay Later through Apple Pay, right? Apple Pay Later is actually the new service there where you can actually get a credit embedded in the payment from Apple Watch and from an Apple Wallet. Quite interesting to see, and you see there, and I think it's been said already for quite a while, open finance is really going to power the big tech giants that control to a large extent how we consume digital services and are really going to embed financial services into that. Very interesting. I'm also curious also what our speakers of the rest of the day have to say about that, because this is also something that you always have to think about as a partner strategy, for example. Well, we also see that there's a lot of acquisitions going on recently, especially with valuations becoming lower and capital becoming more expensive for ventures. But at the same time, we also see that some are actually doing divestments, also like Goldman Sachs with their Green Sky platform. It's a real estate-based platform that they really wanted to get rid of. Interesting development, because it's a bit of a cross what you would expect, while most of the large incumbent players are currently acquiring more tech players. And you can also see that by, for example, Visa thinking that they should invest now in companies. So they raised a new 100 million war chest to invest in generative AI solutions. Of course, Gen AI is since December last year, when OpenAI launched ChatGPT functionality, has been completely crazy with regard to valuations. I think the valuations of generative AI companies went fivefold between 22 and 23 on average. So you can imagine a little bit that is kind of crazy at that moment. So a lot of parties are currently investing that, and so it's really on the top of the hype cycle there. Well, you probably know that also in Europe there's a lot of debate about the dependencies of Visa and MasterCard with regard to payments, but you also see that also in other parts of the world that plays a role, like with the UAE, where they're actually establishing their own rails for payments to get actually rid of MasterCard and Visa in the overarching payment scheme. It's interesting to see how this is of course a relatively small domestic market with not so many actors as in the European Union. But it's interesting to see that there's more parties that are actually trying to attempt to create a much more independent national scheme for payments. Also an interesting one, you see that banks are struggling always with their venture arms. I think especially in the Dutch market we've seen that there was a lot of scrutinization of investments that banks have made over the past years. And so they're always struggling, especially from a PR perspective, on how to deal with their venture arm. And now you see as one of the following solutions there that, for example, ABN AMRO actually spun out their venture arm to Motive Partners. So they decided to actually move the complete portfolio, including the investment managers, to another party to make them independently working together. That means that ABN AMRO is then only now an investment in the fund, and the fund continues without the brand ABN AMRO being attached to it, making it a bit more easy for them to work with that. So I think also quite interesting to see that. I think it's unfortunately also a bit of a sign that a lot of banks, especially in the Dutch market, are sort of struggling with innovation at the moment, because they're being forced to focus on a lot of compliance issues and operational efficiency, and so are much more inward focused than I think they were a couple of years ago. I'll speed it up a little bit. The ECB is experimenting with Gen AI. Yeah, who wouldn't? Makes kind of sense. An interesting one I think as well is that Klarna is launching a tool where you could actually, and I think that kind of shows the power of AI where we stand, you can actually take a picture of something you'd like to buy, get an offer from one of the shops that can offer it to you, and immediately get it financed through and paid through the Klarna platform. I think this is one of the ways where you actually see that being able to do payments is not a reason for people to do business with you. It's an enabler. So if you can't do the payments, you can't do business. But if you can do payments, you still have to add a lot of value-added services on top of that to be able to get the business. And I think this is why you see a lot of experiments from payment service companies to actually extend their services way, way further down in the value chain to get much closer to actually what customers want. And so this is, I think, one of the ones, because if this works well, Klarna can draw in a lot of customers, right? And that actually, they have to be able to do the payment, but that's not actually why the customers are coming to them. A clear view of why every finance product will at some point be embedded, in my view. New regulations in Australia, looking at digital payments, and especially also in the open finance, they're making quite some progress there. It's nice to see. And interesting one as well, as always, we always have a bit of a different view in Europe with regard to privacy, But you see that in Asia, they're actually really keen on getting things tracked for safety, instead of being worried about being tracked for the wrong reasons. So you see that the fact that there's American Express card that can be tracked completely through Internet of Things, that probably wouldn't go so well in the European market. But it's interesting to follow that Asian customers are actually really keen on getting these kind of services. That's it briefly for the highlights of the news. If we then look at the biggest funding rounds, we get Lendbus, alternative finance platform, got 222 million euros. Investry got some nice funding as well, 218 and 150 for Ascent Money. So actually quite some serious funding rounds over the past month as well, including what we're talking about today, alternative finance. And also in the Dutch market, we got not 100% fintech, but they're also doing finance business. Orchestra, a nice company, also in the generative AI space, that got some nice funding last month. And so overall, if you look at the research that we've tracked over the past month, we've seen that the Q3 figures for fintech deal investments came out, and we've already concluded before. But especially this period, Q3 2020 to Q4 21, were a bit of a crazy period where valuations were way too high. And we've actually seen a bit of a normalization at the levels that we saw before that from 2019. Still, we've actually still are a bit on the low side, but very slowly we see that from Q1, Q2, Q3, the funding levels are actually on the rise again. So we're expecting things to very gradually move up again as the markets are kind of stabilizing, and some of the worries that there were about the economy are very slowly fading away. That's it briefly from my side on the monthly wrap-up. Are there any topics that I missed? Are there any questions that you thought, but hey, didn't this happen? Yes?
You made a comment on the venture arms of the Dutch financial institution.
Mm-hmm.
What about the venture arms of the non-Dutch financial institutions?
No,
same pattern? Or
so it depends, they're all at different stages. So for example, I know that Santander already made a similar move to ABN AMRO's, but then already some time ago.
Right.
Others are sort of in the midst of setting up their venture arms. So you see that they're all at different stages in the development phase. I think all of them go through this process where at some point they start out with very limited innovation by just opening up more like a marketing effort. Then they try to make some investments. Then they try to separate their investments a bit. Then you get like internal restructuring, where they go from an independent innovation arm to an embedded innovation in the business. And that's then usually followed by also the step where they say, okay, we have to also separate our venture arm because it begins to stand too far away from our regular business. So it's more of a cycle, I think, where all the banks are going through. At different stages. It really depends a bit on which country you are, but then also on the innovativeness of the company within that country.
Thanks.
Yeah, no problem. Anything else? Anyone? Anything that you heard about to say like, but hey, but I heard about this, what does that mean? Or does embedded mean anything to you? Is that like embedded finance is well known to all of you? I think that's in any case very interesting, right? So I think at least that's the trend where I'm mostly excited about, because it actually brings finance to the place where most people actually want it, and that's invisible, right? Most customers actually don't want to talk about finance products, they actually just want it done. Yes, I saw a question here.
Just some news that I found out 3 days ago, maybe it's already old news, that Ideal sold, so the Europe wants to replicate Ideal.
Those are exactly. So that's a very interesting project. So you've got a couple of years ago they started the European Payment Initiative (EPI) to create this uniform payment rails across the European market. But they've been really struggling to actually get all the different countries on board because all the different countries made their own payment method, like Ideal in the Dutch market. And now they actually acquired Ideal plus Payconic to bring in especially the Dutch market, the Belgian market, and the Luxembourg market as a part to start, and they're starting now with their own solution, Wipro, in Germany and France. So you actually get like Northwestern Europe, where they are starting to offer an Ideal-like solution. In the Dutch market, we won't notice that far because Ideal will remain in the market for a couple of years before they do the transition actually to the new system and also change that. But yeah, definitely interesting development. But still, it's still only a small part of Europe, and I'm really curious as well how far we can actually extend that into the larger part of Europe and create one uniform payment solution that everybody can use. Yeah, thanks. I'll wrap it up for now. And oh yeah, one last question. Yeah.
Does this news about the Dutch government divesting from ABN AMRO, does it have any implication for the fintech market? I think they reduced their holding.
Yeah, so I tend to think that it would be a good thing if ABN AMRO would not be a state bank anymore. So currently the Dutch government still holds 51% of ABN AMRO, and I think that makes it too much influenced by political hassle for it to be completely free to do innovation and go in a certain direction. So I think, yeah, I would say it would be a good thing for innovation if they would be independent again and could actually make a more future-proof path, because now they're really conservative actually. They need to be, because everything is being scrutinized from a political angle. Yeah. Thanks for asking. All right, let's head out to our first speaker today, Jamie. Let's take it away. Let's give Jamie a big hand, everyone.
Thank you very much. Yes, Jamie, quick introduction of myself. I'm heading Fyndoo, which actually is Fyndoo by Topicus. Don, you just introduced us as a part of 5 Degrees, but actually it's part of Topicus. That also goes for 5 Degrees, which is also part of the Topicus family. Welcome everybody. As host of this Holland Fintech Meetup, I would like to give you all a very warm welcome. I'm very happy that we all gathered here today to discuss any kind of interesting topic. And yeah, as the host of this meetup, I would like to emphasize on that we believe it's very important to share insights, to share knowledge, to share experience, which actually is what we are going to do today. And yeah, as the host, I believe those kind of discussions should be maybe a bit sharp or insightful or thought-provoking. I think that's basically the idea of what we are going to do today. So yeah, I have a very brief talk in the next couple of minutes, but of course I would love it to engage with you also after my talk to see what you think about the thoughts that I will share with you in a minute. So please get to me if there's any interesting thing that you would like to do. So yeah, the topic of today is SME finance, which actually is kind of our hometown, our safe haven, because Fyndoo is an end-to-end lending cloud platform, and it actually is starting at engagement, where businesses or private individuals are in need for a loan, up to and including the last final installment and anything in between. But I thought, well, let's go in a different direction. Let's talk tech. So my talk in the next couple of minutes is really about tech and about architectures and interesting stuff which is going around over there. Maybe for some of you it's even a bit too tech. However, I'm quite sure that the things that I will touch upon is really stuff that you recognize, that you are talking about, which is, I believe, important for financial institutions, for banks, for alternative financiers to at least have some thoughts about. So, I thought, let's talk about MACH, M-A-C-H, which is the acronym for microservices, API first, cloud native and headless. So this is really going in that tech. If there's things that you would like to, of course, discuss afterwards, so don't hesitate, please come to me. But we start with microservices. I think you've heard about them, and I personally believe they make perfect sense because it enables us as tech company, so we are actually a tech company, of course, to create small components, small microservices with their own responsibilities, with their own tech capabilities. So yeah, perfect sense. But the question is, how small should small be? in my mind's eye. I think smallness in itself shouldn't be the ultimate goal, you know. And often, if we are in discussions with banks, it's also no, it should be microservices, it should be distributed, it should be, etc., etc. However, I think in this case, size does matter. And why is that? This was actually a publication of Amazon on Prime. That's their video streaming service, of course. And what they did, even Amazon, as a cloud provider themselves, they rebuilt their platform from a distributed microservices architecture to a monolith. Why is the question then? Well, there are two things. One, cost containment of 90%. I think that's quite, well, considerable. And two, that platform just reached sort of certain extent that they couldn't control their microservices anymore. You have to think about that as thousands of microservices that should be orchestrated, that should be interconnected. And actually they didn't make it anymore to get that overview and to get that control. So this sort of contradiction, if you consider Amazon as a cloud provider, let's say, bragging about microservices, actually they rebuilt their own platform to a monolith. And actually my boss would have said, well, that's quite a pity, because we are just investing quite a lot in rebuilding our platform to smaller components. And it's not that the one thing is bad and the other thing is good, it's all about considerations. That's the thought that I would like to share with you at first. The C, I forget the A, API first. I think that doesn't need too much, let's say, voiceover. APIs, application programming interface, that's just the universal language that systems are interacting with each other, of course. Yeah, and that's not so new, you know. I think the seasoned, let's say, sort of tech people in this area, in this room, they know about the 3-tier architecture, you know, data, business, and presentation layers. So actually, APIs is not so new, and I think, yeah, that doesn't need so much voiceover. But cloud native, up to me, is a very interesting one. And why is that? You have to balance, I believe you have to balance the things, the presence that you get from cloud providers like Google, like Amazon, like Microsoft Azure, but also the dependency that you want to have on them. So I'm walking around for quite some time in the banking industry, and in many discussions, lock-in is a thing that banks are reluctant to. And then, on the other hand, I'm asking myself, what happens with lock-in constraints when it is about infra? Just a consideration. Headless, the last part, H, headless. I believe headless is a concept that you, of course, can apply to create great customer journeys, you know? The thing is that you as a bank, you are distincting yourself, you're standing out from the others by creating the best customer experience, right? It's not so much about core banking. Core banking should be solid, it should be robust, it should be maybe even a bit boring. Of course, the customer journey, your product should be good, and headless is enabling such, well, concepts, of course. That brings me to the last part that I would like to, well, just give you my thoughts about, and that's end-to-end versus composable banking. I think this is considered as being a contradiction. I will touch upon it later on, but it's not 1 or 0. It's not binary. It's like you have to ask yourself some questions: who you would like to be, and what's feeling good for you. And that starts with, if you want to go composable, do you have software engineering capabilities, or are you willing to build them? You know, if you're buying composable banking parts, you're not ready. Definitely you're not ready. You have to build a proper software engineering capability. You have to order like 6 or 7 pinball devices, because a lot needs to be happened before you're able to run it. That's not wrong, but that's a choice. are you sleeping silent if you're bringing sort of primary responsibilities from inside to outside your doorstep? And that's about, for example, hosting, that's for management of your tech setup. So there's a lot of questions that you have to ask yourself before going to end-to-end or composable. And again, I think nothing is wrong. But yeah, these are some tech thoughts that I would like to share with you this afternoon. If there's anything that you think is of interest to discuss, of course, afterwards, please get to me, and I am enjoying, of course, a fruitful discussion. I want to thank you again all for being here, and I hope you're enjoying your afternoon. Thank you very much.
Can I just ask you for a couple of things? Yeah.
Of course.
Yeah. All right. Thank you. Also got the mic. Yeah. Because just very briefly, indeed, I forgot to mention indeed that both Fyndoo and 5 Degrees are now part of the Topicus group. So indeed, thank you for it. Great that you're doing this together now. What does Fyndoo do by itself?
Yeah, Fyndoo is an end-to-end tech lending solution. So we provide the technology to banks, to financial institutions, with which they can, let's say, do the entire lending operation from loan origination to loan management, etc., etc. Starting at engagement, ending at getting the last installments from your clients, or anything in between. So that's also credit risk, stuff like that.
Okay.
Yeah.
And so, one thing I'm also curious about is like, how do you work together, for example, in the Topicus group, right? So do you naturally find a partner in 5 Degrees or other portfolio companies, or with Topicus themselves? How does that collaboration work?
Yeah. Yeah. Well, of course, we at Topicus, if you're after acquisitions or mergers, then we always say we're a strategic buyer. You know, so if we buy, that's forever. So we never sell acquisitions, and of course, we then are looking for, let's say, extensions towards our existing business from a strategic perspective. So, in this case, the 1+1=3 strategy. And yeah, of course, if we collaborate with, for example, the 5 Degrees team, that's because of we see new opportunities, not so much for ourselves, but of course for the financial industry.
Yeah.
You know, so that's really from that strategic angle to make it better for existing customers, but also for prospects and new customers and new business.
Okay, cool. Then one last one, and then maybe just want to check if there's one question or so from the audience. The headless part, I might be a bit behind here, but the headless chicken had me a lot, but can you explain a little bit how that works, right? Because I know customer journey focus everything, but how does headless exactly work from that perspective?
I'm not sure whether you have, let's say, for 1 more hour, but I will try to keep it briefly.
Okay.
From a traditional perspective, if you see technology, there's sort of 3 tiers, 3 layers. You know, it's data, it's business logic, and it's presentation. And headless is that sort of your backend is surrounded with APIs, and that means without a head. And then the head is, of course, the front end where customer experience happens. And headless means that you have all the business logic, you can do it all. And on top of that, you can build your own customer journeys, your own customer experiences. So that's basically what headless means.
Okay, so leaving a bit of flexibility at the user, the customer experience side to adapt, basically on top of your core.
To make your winning customer journey. Yeah.
Okay. Cool. Clear? Any questions from the audience?
I might have a question regarding the credit underwriting. As we all know, quality of the loan book and generally the mechanisms how to score customers is one of the most valuable assets in lending companies. So I wanted to ask if Fyndoo offers this module, and if yes, how do you offer it to many competitors?
Sorry, the last thing.
How do you offer it to competing companies?
First question, yes, of course. Fyndoo includes a rule-based underwriting framework, and that basically is during loan origination or loan management. Of course, information and data arise during, let's say, a loan application. You know, And that underwriting framework is able to process all those parameters and do, and we always say that's sort of a traffic light concept. Red means hard stop, knockout, go somewhere else. Then we have the green area, that's you comply to all the underwriting policies that we have, and we have orange, and that means, well, there's no yes, no, not a no, but we have to make sure that a loan officer or someone else will have a look at this application. So yes, that's included. And how that compares to competitors, I think that's from the financiers angle, or?
Yeah, whether that framework, I think what you mean is that if you have a risk framework,
Yeah.
whether that's actually shareable between competitors, because it might be proprietary and people might be
Yeah, well,
sensitive to that.
Yeah, of course. Yeah, well, that's the fun thing, because that's always where we say you choose. You know, all those, let's say, rules, and of course we populate it with predefined, pre-configured rules. But at the end of the day, you can say, okay, I would like to have a minimum debt service coverage ratio of 0.5. That's your policy. That's not. That's a no-code engine where you can say, okay, this is my underwriting framework. These ones can be do straight through. These ones I want to do manually. So we built it. We offer the tech. You define the rules. That's basically how we make sure that we won't let our clients compete with each other with the same rule set.
Thanks, let's wrap it up for now. Thank you, Jamie.
You're welcome. Thank you.
Well, here I am again. Apparently I'm good at clicking buttons on an iPhone and remembering stuff. I'm Marijn. I'm the CTO and one of the co-founders at Floryn. We are an SME lender, so we lend out money to businesses. Our marketing campaign is full speed ahead again, so I'm wondering who has heard about Floryn actually, because then I know our marketing works. Yeah, that's good. It's good enough for this target group. Thanks. So, what we do is we want to help entrepreneurs realize their ambitions. We do this by lending them money. This is of course because the entrepreneurs use the money to grow their business, buy raw materials, hire more staff, etc. So, by financing businesses we are creating and helping them to grow. I'm Marijn, as I said, I'm a technical guy. I have a shirt now, but if I just change a hoodie, then I will become a legit CTO. For now, this I'll have to do. We do this by utilizing technology. So it's been going well. Of course, the chart doesn't have a y-axis because you don't want to spoil all the numbers, but it's going from the bottom left to the top right, which is always great. Especially when you have VCs invested in your company, this is like perfect. So we financed about 260 million to Dutch SMEs. We have less than 1% in credit losses. We look at a ton of credit applications every year, every month actually. We have a really good review score on Google, which means we are making people happy with our loan application process, which I think if you're a restaurant and you have good reviews, well, you exist. For a financial institution, this is usually quite hard because we also say no to people, and usually this is not the most fun process that you go through. We have built our own credit intelligence engine, so we do our own underwriting, and I will show you a little bit on how we do that. We're currently with about 65 people, of which 20 are in the tech team. We have a couple of USPs, mainly two ones. The first one is the customer experience. So what we want is a very fast, seamless experience when you get a loan. Everyone wants this, of course, but what we don't want is you talking to a banker for 3 months, having 2 or 3 visits, either in their office or in your office, giving them numbers, and then more numbers, and then going to your accountant because the numbers need to be slightly different again, and then, oh wait, a quarter has passed. Let's do some more numbers. So we want this to be fast. We do this by having a PSD2 license. So we were the 7th company in the Netherlands to get a PSD2 license. So we connect to the bank account of the entrepreneur. Then we get all their transactions, and based on that we have a credit line. This means we can do this quickly. We also have, of course, all the other stuff that you would expect online. So the onboarding, contract signing, all that stuff you should have had online 5 years ago. This means we can do it fast. So the fastest conversion, I think this year, was 4 hours and 22 minutes, which is from signing up at the website to wiring the money. So that's the most conservative range, I would say. Well, you could count when the money hits their account, but unfortunately that's complicated. We do a couple of different loan types. It's a bit small, so I'll just read it out for you. It's not that complicated. We do a business loan, which is a fixed term loan, 3 to 5 years. You know the deal. Business credit, which is a kind of like an overdraft facility. So you have a limit of, let's say, 100K, and then you as an entrepreneur decide when you want that out. You can always repay without any penalties. So this works like an overdraft facility. You have an app, and with the app you can just say withdraw money, of course, up until then. And finally, we also have factoring, which is actually where our roots are. But I think 95% of our customer base is in the middle product here, which offers the flexibility that entrepreneurs want. All loans contain a repayment scheme because we believe in responsible lending. So what we did on the technology level is we do the whole customer journey. So we do the marketing website, but we also do the underwriting process. So it goes from, like the previous speaker mentioned, the engagement, where people first hit your company to make that seamless, data extraction, data collection, everything, the whole loan application process, to the underwriting. We have our own underwriting team, but we also do this data-driven, of course, so we do the credit analysis, we have machine learning models running, the whole thing. Then the onboarding, which means you have to do KYC, sanction screening, transaction monitoring, the whole thing. We are regulated by the Dutch Central Bank, so we have to do all this right. And finally, the customer lifetime. So you have to manage your whole portfolio, you have to make sure that you don't incur any losses. Because as everyone who is into lending knows, lending our money is quite easy. You just need an IBAN number and you transfer it. Getting it back is the hard part. So we have about 70 million banking transactions that we've trained our models on, that we gathered during this process, which is the most interesting number. Sorry, there's so much stuff on the slide. The second USP is, of course, making the actual decision, right? Who do you finance and who shouldn't you finance? So we do this based on transaction data. So we have our data sources on the left, primarily transactions, but also other public sources like the Chamber of Commerce, Google, and other online profiles, mainly for fraud prevention. What we do is you pull in all the transactions, and then you look at them, right? You look at the description, the counterparty, all that stuff, and you try to make sense, right? What is this? Is this revenue, or is this someone collecting money? And is this a tax payment? And if so, what kind of taxes? How do the tax payments relate to the amount of revenue that you're having? Does it make sense? Are you still paying back your COVID tax backlogs, for example, which is a really important thing, well, as of today. And finally, behavioral patterns. So if you go to a casino, that's fine by me, but if you do it with a business account that we're going to finance, maybe not. Also, I don't have any particular opinion on crypto investment, but again, please not with your business account and our money. So these behavioral trends are also very important. We do this for loan sizes from 10K up until 3 million, so per customer. It's quite a wide range. This is tricky because for the larger loans we do also ask for annual accounts and all that other stuff. But for all loans below 250K we can do it in this fashion. One more thing, this goes into two places at the end. It goes into a credit analysis where a human will make a decision, and it also goes into, well, not one machine learning model, but I think we have 3 or 4 of them now, where the machine learning model will make a decision. And the combination of these two is what makes it work. Because I just mentioned COVID. Well, our models didn't really work back then, right? Because all your KPIs changed, which is why you need humans, because humans can really spot things that are patterns that are changing rapidly and that you didn't see before. However, humans do something else every day because they're humans. So there you need your models to bring in the consistency and to benchmark the humans if they are doing their job correctly. And then the humans benchmark the model, because if we mislabel some data, then the decisions get strange. So the combination works really well together, which is why you need to explain your decisions well. And we explain our decisions both to the entrepreneur making the loan application and of course to our internal staff. So explainable AI is a big part of this. We give our customers a dashboard with all the information that we get from their bank account so that they actually can see if we reject them because their revenue is too low. We will show them what we think the revenue is and they can correct us if it's wrong. Finally, a bit of a technical note on the explainability part. So you might have heard this before if you're into AI. It's a bit technical, but explainability is a big thing. Both from a regulatory perspective, but also purely from making it work, I would say. So we've been to a bit of a journey here, and I think it all starts, if anyone has done something technical or saw a technical presentation about AI and explainability, it looks something like this, which means shock values, which is your features and then numbers attached to the impact that they're having. Nobody understands this stuff. Well, maybe I do, but your customer certainly won't. So what you usually see is a new transition into, let's go from these technical values to making them explainable for our users again. So then you get the red, yellow, green stuff, where you say, okay, what is the percentage of your revenue that is in the Netherlands, for example, which is a KPI that you could use, or how well is your revenue spread between different customers, right? Are you dependent on only one, or do you have 20 customers? And how consistent are they? Those things you can translate into human values that you can talk about with your underwriters. And then the model that we're now going towards, and that we've quite recently launched, is where you group all of these KPIs into rules that actually drive the decision. So instead of giving a whole bunch of values and stoplights, you can say, well, given all of these values, if you would change this one thing, then it would flip into an accepting, into an approval, for example. So let's say, out of all of these things, the company just exists for 3 months. And yes, all the other KPIs matter too, but if you take the whole model into account, this is the most important thing. So let's look into that one, and that might explain why the decision is like it is. So then you really go from the pure statistics towards having rules that your users can actually work with. And then we have the thumbs up or thumbs down interface, where an underwriter can actually say, no, this doesn't make any sense at all. So instead of saying, yeah, I disagree with your model, they will say, no, I disagree with this decision or with this KPI, which gives our data scientists much more information to work with. So that was a roller coaster, but again, I only have 5 minutes. So what are we looking for you today? Why are we here? Well, we are a member of Holland Fintech. We are, of course, a fintech, which is why we're here. We are always looking for partners in the market, so we do things our own way, we build our own technology, but in order to be successful, we also work with a lot of partners in the industry to do business together. For example, we have a partnership with Bol.com where we do e-commerce financing. So new partnerships is always interesting. We are always looking for people to invest in the company, which means in the debt part of it. We have NatWest as a bank for our main financing line, but we're also building other SPVs aside of that. So if you're interested in that, you can also look me up. And in general, if you want to talk about technology, I'm always interested in that. So, thanks.
Hello everybody, I'm Aerle van Loon, Deputy CEO of Fyndoo. And I'd like to present my company in the next 5 minutes. So, Fyndoo, what we are is basically we're a software as a service that helps out lenders, financial institutions to manage their working capital finance. So, working capital finance, that means basically accounts receivables as well as stock finance. The two go together, actually, but if you look at the history, you'd see that accounts receivable finance has really taken off over the last couple of years, since 2007, but the same doesn't go for inventory finance now. So why is that? Basically, there's one word for it: because it's difficult. Banks are really struggling with it. You have to take in a lot of data. The risks are very multi-divisional risks, multi-parties involved, and if you compare that to accounts receivable, it's a lot easier to do. So that's why it's not a very popular product. But what if there would be a solution that would help you out and just make stock just as bankable as accounts receivables? Now, at Fyndoo, we believe we've cracked that nut. And just help the lenders out, managing these loans with taking all these data in the same way as you would be able to do receivables now. Currently, we have just over 2 billion euros on the platform. It's all stock. There's accounts receivables as well. I come to that back to that later. So we believe it's really well. My animations are not quite working as well as you should, but it's no problem. So 2 billion, our flagship customer is ABN AMRO. They're in the process of onboarding their entire portfolio of stock finance on our platform, and we're actually really happy with it because we really helped them out moving from time-based way of risk management to risk-based way of working. and it really helps them out, being much more efficient, but also building deeper relationship with their clients, coming up with better tailored financing solutions to their clients as well. So, how do we do that? So it basically takes 4 steps. So every night our extraction scripts start running. We plug into all the ERP systems of the borrowers. We get out raw data, we transform that using transformation scripts into normalized data, and then we run borrowing-based calculations. So every lender comes into the office the next morning. He will have all the information just readily available. As opposed, compared to the former way of working, where you have to process all these Excels from your clients, taking days or maybe even weeks in order to come up with something that looks like a borrowing base. Well, with our solution, you have anything readily available, and with a lot of functionality as well to perform analyses, to determine if anything is out of the ordinary. Maybe you want to contact your client or not, if something's on hand. And we present it in a user-friendly platform. So the idea is also that both the borrower and the lender can log into this platform, use the same data, communicate on these data with each other. So in order to really get a deeper relationship, so because we truly believe that if both parties understand each other better, they will ultimately work into a better relationship and happier parties. Now, we actually run 2 platforms to perform all this. There's one which we call Fintech, which is basically our data hub. It's plugged into all these ERP systems, gets all the data out, gets it ready in the service API for all data receivers, just to get it out and to do their business with it, which means our intelligent platform, where all the stock intelligence sits, is actually a client of our Blue platform, but just as well, all other kinds of data receivers can be plugged into Fintech as well. So, which means we can also feed into core banking systems with all the core data, so that they can present it to their clients in all banking portals as well. So, we're a SaaS. We deliver it to lenders, help them out with asset-based lending. And we automate your credit risk management processes, saving them a lot of time and helping them in building more beneficial relationships. That's what we are. Questions?
Yes, thank you, Eric. Any questions already? Yeah, let's pick up one here.
Hey, how are the borrowers receiving this new process?
Yes, good question. Well, we work on behalf of the bank, so it's basically after in an origination process of a loan that the bank sets it as a prerequisite for being granted a loan, that the client will have to be connected to our platform. Now, what we usually see is that as we take in a lot of data, more data than they would provide to the bank, were they able to work with the previous way of working. At first, they're already a little bit afraid, because data ownership, confidentiality, how does that work? But actually, what we see, after initial, hesitance, they really see the benefits, in having an improved relationship with the bank. Also, what we see is that with ABN AMRO, we see that normally a bank is very prudent when it comes to stock finance, because it's scary, you don't have a lot of data, so you're going to be very prudent. You would say, okay, for this inventory, I advance maybe 50%. But using our platform, you have daily data, you get much more information, you can do better trend analyses and everything. Banks tend to take a little bit more risk, and that would provide more a higher loan amount as compared to the previous way of working. So at first, they're a little bit scared, but in the end, most of the clients that we see are very happy with working with the platform. Yeah.
So what kind of systems do you tap into? Is it like the ERP system of the borrower in the end that you get the information from?
Most of the times, yes, but also we can plug into warehouse management systems if they're renting warehouses, or And then there's also a possibility to reconcile these data with what's in their ERP system, what does the warehouse management system say.
Yep.
That really helps the reliability of the data as well.
But it's not continuous yet, it's now daily, it's a 24-hour cycle basically.
Yeah, it's not a real-time transactional-based interface. You know, we extract data on a daily basis for most of the clients.
Yep.
Is there any fraud prevention built into that system? Because basically then the client can put anything in his ERP system and it gets forwarded to the bank.
Good question. It's about fraud. I don't know if everybody heard it. Well, the thing is, you have to compare it to what banks were working with before. And if you compare it to that, it's obviously a big step forward. But I won't go as far to claim that we're completely fraud-proof. But the thing is, since you have daily data as opposed to maybe monthly or bi-weekly data, you obviously have a much better insight into trends and much smaller standard deviations on what's out of the ordinary in order to detect if anything's wrong, either intentionally or unintentionally. So there is a step up as compared to what banks were used to work before. Yeah.
It's always a challenge to go from physical to digital. There's always a risk of fraud. It's pretty tough. Just checking in. Let me see. Yeah, it was done. Then indeed, the best presentation for today, according to your votes, was Jamie. So Jamie, come on. Where is it? It's coming. Fortunately, Marijn already got one, so but here you go. And thanks again as well for hosting us here. Thank you. Want to say any last words?
Well, I will keep it very short. Thank you for votes, and let's go with drinks.
Well, thank you. Thank you for hosting us, and indeed also for powering the drinks. We just put up here the next events for you. So indeed, join us on the upcoming events. We'd love to see you there again. Got a lot of interesting topics coming up. Yeah, looking forward to see you soon. Let's go for drinks. See you all later.